Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you and start this year out on a good note with you.
Well, Mike, before we went to air, an interesting story from you that people are now buying virtual real estate, and I said, what the hell is that? Virtual real estate. I thought we only had so much land on this planet, so now they have to just make it up for cyberspace. Is it for those people who are going to be on the new Facebook, where they're just going to be virtual?
I don't know. It's pretty bizarre. This is a story that came out last night, actually, on CNBC. And they interviewed somebody that runs or is the CEO of a company called Tokens.com. It's based in Toronto, and it specializes in selling people metaverse real estate and non-fungible token-related digital assets, like the NFT art. So this is a version of these virtual art things we heard about last year, but the prices are crazy. It's said that they were selling 300 spots on a virtual island, and they were going for $15,000 a piece a year ago, and now they're going for evidently $300,000 a piece, which to me seems completely crazy. But it's a lot of craziness in the financial markets anyway. I mean, the financial markets are completely separated now from the real world. And this is just one example of that. I mean, if I want to buy real estate, I'm going to go and buy real estate that I can see, that I can rent out to people, or buy land that you can grow food on or something in the real world. I'm certainly not going to do something like this. This is just throwing your money away. Unless someone is going to pay a higher price, it's pure speculation. You know, if you pay $300,000 for one of these virtual private island spots, and someone is out there to buy it for $400,000, well, that is good. You make a profit, but that's pure price speculation, betting on something that has no real value in the real world at all. And that's what much of the financial markets have become. I mean, we saw that in the crypto markets. We've seen that with sky-high valuations in various stocks, many of which don't even turn a profit. And there are even exchange-traded funds that specialize in such things. They don't talk about valuations, though. They just make out like these things are new technology, they're going to change the world and do this and that. But most of those stocks have been badly lagging the stock market now for the past several months. And one easy way you can look at this is the ARK Innovation ETF, because it specializes in these stocks, and it broke down in November when it closed below 105, and as we're speaking, it's trading right around $82, but it actually peaked out at 160 in February. But if you load up the top list of Robinhood, many of the stocks in this fund make up that list, meaning that they're still remaining the most popular, widely owned stocks. So one thing I see happening is there have been changes taking place in the financial markets over the past 6 months. One simple one is the inflation trend. You know, a year ago, people were saying, oh, inflation is going to appear in the spring and then be transitory and go away. Well, that obviously didn't happen. It only accelerated in the fall to the point where yesterday we got an annualized CPI data of a 7% CPI growth from January this year to January last year. This morning, we got producer price index numbers of 10%, and the Federal Reserve is set to raise interest rates at some point this year. These are things that were not going on a year ago, but they are now, I believe, the dominant underlying trends of the market have to do with inflation and changes coming in interest rates, and it's causing changes in the financial markets, one of which is making these fad high valuation stocks badly lag. But all that said, when I look at what these people in Robinhood actually own, they're not adjusting to these changes at all. They're still behaving as if this was 2020 in the fall, that in the last quarter. These were the stocks that went up that quarter the most, and now they're doing terrible. So, for example, number 2 on the list is AMC Entertainment. NEO, Lucid Group is on the list. Plug Power, NVIDIA, Snap. The Robinhood stock itself opened up last year and went over $30. Now it's at $15. I can go on and on, but we could also talk about the things that are working in the market too.
Mm-hmm. We'll have more with Mike Swanson, and we'll take a look at what's really working with real things.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. So we'll go from imagine, if you will, to imagine if it is. What is working in the market for real?
Well, as I suggested, the big underlying trend is inflation, and commodities are doing great. Energy, is just trading up and up this year. The energy stocks remain among the top performing sectors of the entire stock market. For example, the XL ETF opened the year up at 56, and it's at 63 as we speak. Whereas the NASDAQ is down from the open, and so is the ARK ETF. XLE, energy stocks are up. But it's not the only thing. There's commodity ETFs that are doing very well too, but something I think that hasn't really taken off yet, and I think is getting ready to, is gold and silver. So if you look at the U.S. dollar index, gold and silver historically trade opposite to the U.S. dollar index, and gold and silver have been consolidating now for a year and a half. It's one of the longest periods of consolidation in them in over 22 years. And typically the saying is, the longer the base, the bigger the next move is when it happens. So I think we're going to see gold and silver be among the big stories of this year. And if you look at the U.S. dollar index, it had a rally starting in June, when it touched 90, and by November it touched 97, and it went sideways between really 96.5 and 95.5, and then yesterday it broke down. So I think that spells the end of the rally, and at the same time, many foreign currencies, they had been going sideways from around Thanksgiving till just 2 days ago, and have broken to the upside. So, for example, the euro has done that. The Swiss franc has done that. The Japanese yen has made a similar move up. It's not yet coming out of a base, but it's been going up the past couple of days. And these are all positive developments, I believe, for the price of gold going forward. That big consolidation range for gold, it's really defined by two resistance levels. One around 1825 and 1830, which is really the high around New Year's, and we're bumping up right on that level. We touched it earlier this week, and I think we're getting in position to see gold go through it. The next level is around 1880, and it's not that, and even that's not that much farther from here. And I think if we break that, we're going to be coming out of the base and, having a rally that's going to last for months, if not for the entire year. So I think this is the biggest trade opportunity I see right now, because it hasn't broken out yet. And you could buy gold, and if you wanted to put a stop on the low of December, you're looking at like 1750 or so. You're not risking very much from where you would get in now. And with silver, the story is the same. Silver's low is 21.5, and the recent high on silver is 23.5. I mean, we're trading right below it. So as silver goes up, tends to go up more than gold when it does, when they both rally. So, it's a good entry point there. And the right mining stocks will, of course, go up even more than the metals. So at this moment, I think, these are what are providing the best entry points. I mean, I like energy. I'm invested in energy stocks, but they've just been going up, and up. In a certain sense, you kind of would be chasing it if you bought energy stocks. I mean, they're already up, a lot of them over 10% in just the start of this year. Exxon was around 61, and now it's already at 71, up $10. So gold and silver haven't moved yet, and I think that's what people need to keep their eyes on now for the next good opportunity in the markets.
And of course, with gold and silver, whether the price goes up or down, it's still there. I don't know about virtual real estate.
Well, that's the argument I make to people that I don't believe in virtual real estate or virtual coins or any of this stuff myself. I think it's very silly, but a lot of people do, and a lot of people have gotten into the markets for the very first time in their lives because of crypto. Many younger people got enticed into the markets because they heard stories and predictions that crypto could go to 100. Bitcoin, for example, would go to 100,000. We've seen dramatic moves in things such as Dogecoin and other coins, and that gets people's attention. That makes people want to be a part of something. They hear stories like that. They buy, they jump in, and that's their first experience in the markets. But to tell someone like that, if you want to help them, that this is bad, this is junk, this is silly, they're not going to listen. They'll feel kind of like they're insulted. So the easiest thing to do is not approach them that way, but just tell them, look, silver, for example, as you said, it's real. I feel more comfortable buying it because, if I buy a silver coin, I can hold it in my hand. If I buy an exchange traded fund, some of them hold the physical. It's, as you said, it's real world stuff. It's not going to get hacked in exchange. You don't have to believe that the whole world's going to change or all these different things, but it's less volatile, too, than, gold. I mean, gold and silver are less volatile than Bitcoin and crypto. And I think that's the key thing to tell people. Look, you've gone through these markets. If you were one of the millions that opened up a Robinhood account in 2020 and you got into crypto, you have seen these wild swings and crashes and crypto stocks crash and all this volatility. And as a trader or an investor, I want to buy things that are more stable, that when they do go down, they don't go down 50% or 90%, which Bitcoin did basically in 2020 when the markets mellowed down that March. So when I look at silver right now, if I were to buy 10 ounces of silver for $230, $40, $50, what's my downside? Maybe $200 or something maybe, it would go to $200 in value, lose 30 or $50 for a little while, and then it's going to eventually come back. With these cryptocurrencies, you can't say that. That they can completely crash and collapse, and we're seeing that in crypto stocks. And Coinbase, for example, was at 370 in November. Today it's at 240. In Robinhood, which makes money off of enticing people into these things, it's trading at a 52-week low, or just above it, at 1542, and it was at $70 in August. Yeah, these are devastating losses. Silver isn't going to crash like that, or gold isn't going to crash like that either. So I just feel a lot more comfortable in being in them, and they still have just as much upside as people say these cryptocurrencies do.
Do you pay attention to what's happening in markets like Turkey or Argentina, where their currencies are under pressure?
Well, Turkey is a situation I'm just watching. I actually bought into Turkey. Let me check time on the chart. It was November of 2021, and the Turkey began a financial crisis back in 2019, and I like to try to find the bottom of a situation like that. We saw that, for example, in Greece in 2012. It was a great buy point, and I kind of was lucky to get in near the low on Turkey. I bought the ETF TUR, and then a couple Turkish stocks that trade as ADRs in the United States. And it did great for a couple months. And at the time I bought it, they were saying they're going to raise interest rates to stop the lira, their currency, from collapsing. And that's how these crises typically end. And the currency had a nice rebound. Turkish stock market rebounded, and it was a great trade for me. But then all of a sudden it crashed. So I didn't lose all my profits, but I lost over half of them overnight, because their ruler, Erdogan, he came out and said he wants to lower interest rates, and he's been talking that tune ever since, and the lira has been going lower and lower ever since until last month, and he announced a bunch of emergency measures, which made the lira shoot back up and their stock market shoot back up. But from what I understand, the emergency measures amount to basically currency controls, and telling banks that they have to hold so much liras, like enforcing them to buy it. And if this move doesn't work, it could result in a real true run on their banks, which would crash everything even worse than we've seen so far up to now. So I'm not sure if his move there is going to work or not, and I'm content just to watch for now and see. But I'm not up on what's going on Argentina, so I can't really speak to what is happening there. But the lesson from Turkey I learned from it is, when you got these rulers, real authoritarian guys, they can make the markets move like in their countries' economies suffer like you wouldn't believe it.
Mike, anything else we should be keeping an eye on right now?
Well, the other thing, I'm very negative on a lot of these high-flying technology stocks and, as I said, these fad stocks. But the S&P 500 so far, I would say, is hanging in there. It's outperforming, and I'm not sure how long that's going to continue. It could continue for months, before the S&P 500 were to really go into a meaningful correction. But a lot of stocks are trading very poorly, and those are best avoided. And the Russell 2000 in particular is just trading right on support. It's lagging the S&P 2, and I'm worried that's likely to break down. We've seen ARC break down. The Russell's likely to be the next thing that breaks down as an average, and then the S&P and the Dow at some point later this year.
Mike, thank you so much for chatting with us.
Thank you. Great talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.